Right, welcome to our session this week, my friends. We are going to continue with leases. We did the operating lease, we did the finance lease in the books of the lessee. So we need to do the finance lease in the books of the lessor. We need to do the finance lease in the books of the lessor. Right. Right, and also I think sometime this month I might have along the way double sessions, including weekends. That is our normal Tuesdays class. Weekends. That might mean maybe converting the physical class into an online one. Simply because I think all of us by now we know that you are writing a test at the end of this month. I think it should be on the 29th. And there are topics that need to be covered there, like the property, plant and equipment and stuff like that. So we should make sure that by that time that you write, you will have covered everything that you might need in that test. So this month, don't be surprised if I say that I need another class during the weekend. We just have to make sure that by the 29th, the day of the test, I don't know if it's exactly the 29th, but I think it's around the 29th or so, you'll be writing a test, and it has got more marks than those other smaller test assignments like the one that you did. So want to make sure that we do the best out of it. So I think it's confirmed that it's 29 May. So before then, I might have to call for additional classes during the weekend, but I don't think it's this weekend. I think it's from next weekend, not this weekend, but from next weekend. This weekend, I've got other guys who are writing next week who also need attention. So I will definitely add some classes starting from next weekend, from next week, so that we can be able to make sure that we cover this stuff. Right. So let's proceed. Right. Let's do number two, question two. Let's deal with question two. Right. We are told that heavy machinery is a company that manufactures and sells a heavy machinery within South Africa. The company is located in Krugersdorp, Johannesburg, and there's a 28 February year end. During the 2022 year end, heavy machinery was approached by Builders Private Limited to list one of machinery 101H, a heavy machinery which will be used in building one of them projects Builders Private Limited is currently involved in. Lease of machine 101H. On 30 November 2021, Heavy Machinery Limited signed a contract for the lease of machine 101H with Builders Limited for a period of 4 years. Builders Private Limited is an option to extend. Isn't it the one that, let me just verify here something. Well, I don't want to repeat something that I did. I want to do different things here. I think it's not the one that I did. I think I didn't do this one with you. Okay, it's fine. But I thought I was making a mistake that I'd done it with you. Didn't want to repeat. Right. The term of the lease agreement is as follows. Fair value of machine 101H on 1 December 2021. Then the lease installments payable quarterly in advance, 91,250. Lease term is 4 years. Guaranteed residual value by builders, private limited, it's 135,000. Then the unguaranteed residual value at the end of the lease term, it's 155,000. If machinery limited paid legal fees of 17,000 to its attorneys in order to facilitate the conclusion of the lease agreement, and builders private limited incurred commission cost of 10,000 to conclude the lease agreement with the heavy machinery. Right. This list, the first thing that we have to understand, remember I said that we should understand whether the lease is a finance lease or it's an operating lease. Right. We're supposed to, we're disclosing the notes in the books of heavy machinery. Right. From the nature of the business of heavy machinery, we can reliably assume that this is a finance lease, considering that heavy machinery is manufacturing and selling the heavy machinery. Right. So now we assume that they are selling that machinery. So when you are definitely selling the machinery, that will be a finance lease. Then number two, we have to understand, are we dealing with the books of the lessor, or we're dealing with the books of the lessee? In this case, we're dealing with the books of the lessor. Right. When you are dealing with the books of the lessor and it's a manufacturing dealer lease, maybe let me just so that I can note some of the things that I might need to write. Right. Manufacturing dealer lessor. Right. The lessor has to account for revenue. At the lower of the fair value and present value of lease installments. Discounted using the market related interest rate. Now we're told that the lease, this 101H. Now the lease was initially for a period of 4 years, and builders has an option to extend the lease term by an additional 2 years. Right. When you start the lease, you have to check, are they likely to extend the lease by the 2 years? If it's likely that they will extend the lease, then would initially take the lease, although they signed for 4 years, we'll take it as 6 years. If it's highly probable that they will extend the lease, we'll take it as we'll take from the beginning, we'll take the lease as 6 years. Is that fine? Right. Then we were told that the lease commenced on 1 December 2021, and Builders Limited concluded that it was not reasonably certain that it would exercise an option to extend the lease term. Right. If it's not reasonably certain that they will exercise the extension of the lease term, then we are going to take the lease as we'll take the lease as a 4-year lease. We'll not use the 6 years. We'll just use the 4 years as it is. Right. So I was making a mistake. Although they manufacture and sell, it seems as if this machinery, they are not necessarily selling it. They are actually leasing it under a lease agreement. They are not necessarily selling the machine, but they are just leasing it under a lease agreement. Right. So instead, we're not going to use the principle that I was talking about here. So this becomes irrelevant. Right. So first of all, we have to calculate the interest rates implicit in the lease. Right. For us to calculate the interest rate implicit in the lease, we are going to say the fair value plus the additional fees, a direct cost paid by the lessor will be taken as the present value. So our PV would be equal to let me just okay. Right, it would be equal to 1,376,500 plus the additional cost paid by the lessor, which is 17,000. What do we get? What do we get? Thank you. 1,393,500. That will be your PV. So you add the direct cost paid by the lessor. Right, the lease installments 91 quarterly, 91 250. So that means our PMT is equal to 91 250. Remember that your PV and your PMT should have different signs. So we can put a negative on the PM your PV, right? Then your lease term is 4 years, but the fact that they are saying quarterly, we are supposed to multiply by n would be equal to 4 by 4, because they said it's quarterly. That means we have to have 4 quarters in a year, so that means 4 by 4. Right, then our FV will be the guaranteed plus the unguaranteed residual value added together. FV, which is equal to 135,000 plus 155,000. Right, what do we get there? Thank you so much. So you should make sure that your PMT and your FV have got the same size. At the same time, what's your like if the PV is negative, your FV and your PMT should be positive. And if your PV is positive, then you make the other two negative. So they should the PMT and the FV move together. Right. So then can we find our I? And you should be very careful about one thing here in this case. These payments are made at the beginning in advance. So make sure that you set your calculator at the beginning of the year. Make sure that you set your calculator at the beginning of the year. What do you get? You can be trying. There are colleagues that were saying that they don't know how to use their calculator, but you didn't even. I think I said that everyone who is not comfortable with their calculator, inbox me so that I can help you. Your calculators are different, so I cannot do a class on that. So you have to make sure that you inbox me, then I see how I can help you. I'm getting 2.070. What's happening here? I think the 7041 is what I'm getting. I think the one by Nonhlanhla Ngovile, I think that's okay. The other guys, I think the other guys, the problem is you are not setting your financial calculator to the beginning of the year. Let me just check how you are getting. Let me just make sure. Yeah, it's because you didn't set your calculator at the beginning. You get 2.44 if you don't set it to beginning of year. The installments are being paid at the beginning. So before you calculate, set your calculator to beginning mode. So this is per quarter. Which is what? If we multiply that by 4, what do we get?
Eugene, are we supposed to multiply or divide? Because I think I remember it as being N you multiply and I you divide.
No, what we are doing, we are trying to express it as an annual percentage. So you have to multiply by 4.
Oh, okay.
So multiply it by 4 right now. The one that we have is the one that is already divided. So we need the one that is multiplied. So that's 10.28, 10.82%, 8165. I prefer the many decimal places. Sorry, I think I'm writing it the wrong. 10.8165 per annum. Like usually they want you to also express it per annum. That's why I always ask for this one. Otherwise, that 10.8165, we won't use it. Otherwise, we'll use it on the notes. When we do our tables, we'll just be using the 2.07041. Right. Then That would be our interest rate implicit in the lease. Then can we prepare the amortization table? Remember, we're doing the books of the leasehold, so we don't even have the right of use asset and stuff like that. We don't have those things. We don't have to calculate the lease liability. We're not in the books of the lessee. When we're in the books of the lessee, that's when we have to do all those things. Right, so we have our debt. So my friends, if it was likely that they were going to extend the lease, we're going to use the 6 years. Right, so it's they are starting on 1 December 2021, and our year end is February. So we'll have one December 2021 after every 3 months. 1 March 2021, 1 June 2021, 1 September. Quarterly, it's after every 3 months. That's how I'm getting these dates. Then we'll have sorry, I think I made a mistake. This one is 2022. 2022. 2022. 22. 23. 23. 23. $24. 25. 25. 25.
Hi, Eugene.
Yes.
I just want to check here. Since the fair value is at the 1st of December, ne? So
The what?
and I'm referring to the fair value, the 1st of December.
Yes.
So when you are counting, you are not starting from December, we'll start January.
To calculate what?
I'm referring to the months that we are capturing now because it
Yes,
says
after
quarterly.
every 3 months, you start from that 1 December. 1 December, then the next, after a month, it will be 1 January. Is that right? 2 months, 1 February. 3 months, 1 March.
Oh, okay.
They are paying on the first, not at the end of the month. So you'll be very careful there. Right. Right. Then we have our installment here. It's 91,250. Then our balance on the first day, this balance would be, the fair value was what? 1,393,500 minus 91,250, because 91,250 was paid on the first day. What will you get? $1,302,250. I think you can now get your things on your, you can get them on your financial calculator. The next things that that have to come after this one. Right, 2 points. I will do it through Excel. My friends, your figures on the financial calculator, they might have a difference of 1 or so. Or maybe let me use the accurate one. Let me use the accurate one instead of using this one that I've used here, so that it can tally with what you get on your financial calculator. So whatever I'm getting here, my friends, you can get them through your financial calculator. And as I said, if you've got challenges using your calculator, contact me, then I can be able to assist. Right. So that will be our amortization table. Any questions before I proceed?
Eugene, can you just assist us with the first line? You see the one for the 1st of March, 2022. What
Use
the
the financial
PMT?
calculator.
Yeah, I do have it. So I want to know what becomes the PMT, what becomes the PV, what becomes the future value. Just give me those amounts, then I'll get the rest.
Yeah, that's why I wanted to say that we should do it outside the class because the calculators will be different, my sister. Okay,
No,
you
just
got your
give us the
amortization.
amount.
What,
The
hello?
amount, like 91250 is the future value or present value, then the installment is the interest plus capital. Like, just tell us what is what. Then we'll put it ourselves on our own calculators.
You mean what is what? What is what? Which amounts are you talking about?
The first ones, like for the 1st of March 2022, because I saw you started with the installment and the balance. So I want to know how you get the interest and the capital on the
You'll be
calculator.
getting, like here I use the Excel, but you'll be getting them from your financial calculator.
Yes, what do you put as what?
That's what I said, that for me to teach you the amortization table, that's why I was asking you that, guys, if you don't know how to use your financial calculator, can you please ask me outside the class so that I can help you how to do these figures?
But you'll get 20 calls. I don't know if other people understand.
Like you have got different calculators. It won't help. Your calculator is not the next person's calculator. That's why I said that you can ask outside the class, then I can help you how to use your financial calculator.
Okay, Eugene, I'll call you tomorrow.
I don't mind about 20 calls. I don't mind about that.
All right, no, I'll call tomorrow.
You have got different calculators. Normally, what I do first, when you inbox me, first of all, I'll give you, there's a template with instructions. If you don't understand, you call me, I organize a session, then I help you how to get these figures.
Okay, so we must first inbox.
So right, I'm just trying to save the time for this class so that we don't waste it on the financial calculator. That's why I say that maybe you can just make sure that maybe we can even use this example when I explain to you. There's no problem.
Okay.
Okay, my sister. Right.
Thanks.
So these are the items that we will have when we are dealing with this list. Now the question is, disclose the following notes to the annual financial statements of heavy machinery for the year ended 20th February 2022. Profit before tax and leases. Right. We'll have extracts of the notes to the financial statements of heavy machinery for the year ended that's 28th February 2022. One, profit before tax. Then we can say profit before tax has been determined after taking the following into account. We have incomes. Finance income. Right, to the list. So the interest is income. You take our interest for this, our year is ending 28th February 2022. So we take this interest. Remember that the interest up to 1 March is the one that is up to 28th February, up to 28th February 2022. So this is the 35215. 35215. So that would be 35215. That's our interest there. Plus. Right. You don't provide the depreciation will not be in the books of the lessee if it's a finance lease. So it will be in the books of the lessee. Right. Then the other things that we might have. Right. And I want you to see that we don't record this figure here. We don't record the costs that are incurred by the lessor, by the lessee. We don't include the costs that are incurred by the lessee when we are doing our calculations. Right. Then we'll have our number 2. We'll have our net investments in finance lease. It will be made up of 2 parts. We first have the reconciliation of net investment in finance lease. We'll have our opening balance. Our opening balance is 0 because they didn't have any balance. The lease was entered into during the current year. Then we'll have new leases entered into. They then entered into this lease, which was for 1,393,500. Finance income, which is the 35,215. Lease installments received. Remember, they received the first installment on that 1 December. They are receiving in advance. There was this payment that was received at the very beginning. We'll put it as a minus as it will reduce the amount owed. Then the closing balance. Right. So this is our closing balance. Then the second note, we do the maturity analysis of future lease installments. receivable at the reporting date. Then you have to show your installments year by year. Year by year. Right. Our current year is ending 2022, and the installments are going to be paid until the year ended 2026. So 2022. Our year ended 2022, so we'll have 2023. 2024, 2025, 2026. Right. We're going to have undiscounted lease payments. Undiscounted lease payments. Right. Our 2023 to 2025, it will be 4 payments of 91,250 each year. Remember, they are paying 91,250 times the 4 payments. What will we get? What do you get? 365,000. Thank you so much. So that will be 365,000 each year. Then 2026, they will then receive these 3. They will no longer be 4. These 3 plus the residual value. Our residual value, which is 290,000. What do we get? $563,750. So that will be 563. Right. But out of those installments, a part of those installments will be unearned finance income. Part of those installments would be unearned finance income. So we have to show the part that is unearned finance income. Right. During 2022, we're going to receive these installments. Of those installments, the unended finance income is this one. Remember, this one we've already ended 35,215. So it will be these three, right? So when we add our unended finance income, we would say 2023. That is equal to 33,699 plus 32,143 plus 35,1545. If you see, I've left the 35,215, although we're going to receive it in the year 2023. That is interest for December, January, and February. We've already ended it by the end of the year. What do we get if we add those three? Okay, thank you. 96387. Thanks, guys. So that's 96387. Right. Then 2024. 2024, we take the 4 interest for 2024, which will be received in 2024, which is this one there. 2025, we take again this 4. Then 2026, we take this 4, on and on like that. Right. So we'd say $28,903 plus 27,217 plus 25,486 plus 23,707. What do we get? $105,223. Thank you. Right. 2025. Would say 21881 plus 20,005 plus 18,078 plus 16,100. What do you get? $76,064. Thank you.
Eugene,
Yes, boss.
double check the amount for 2024. 20, yeah, because I think check on your chats.
On my what?
On your chat, it must be 105313.
313. Okay, 105. I think someone had given me 105223. 105313. So okay. So I'll take that one because most of the guys are getting that one. Right. Right. Can you move on? Okay, so it's correct. That's fine. 2026. That would be equal to 14068 plus 11981 plus 9837 plus 7636. What do you get? 43522. Then we get our net investment. In the list. So that would be our how we report the list when we are doing the books of the lessee. What is our do you have any questions on this one? No questions. Okay, so I'll try to find another one. All right, there's a question that I'm trying to look for. Right, let's do the question 7. Question 7, I want you to see the difference when we're dealing with the lease in the books of the lessor, when it's a manufacturing dealer lessor, you will see the difference between this one and the one that we just did. All right, let me just go on the document. Right. We're told that Extreme Limited is a company that operates in the motor manufacturing industry. The company manufactures, markets, and sells an off-road SUV vehicle, Bruno 7, that competes with American and German-made off-road models. Due to the tough economic environment and the competition in the industry, Extreme Limited had been struggling to increase sales of Bruno 7, which resulted in the profit margins falling. The financial director structured a lease deal that would be competitive in the market using lower interest rates than the market, longer repayment periods, and no deposits. As a result, on 1 July 2017, Extreme Limited leased 5 vehicles to Sahara Game Reserve Limited. The lease agreement for each vehicle provides that ZGR will pay 6 annual installments of 33,493 per vehicle in arrears starting on 30 June 2018. The market-related interest rate is 8.5% per annum. Extreme Limited offered ZGR Limited an interest rate of 5% per annum in the lease agreement. The ownership of the vehicles will transfer to ZGR at the end of the lease term at no additional cost. The lease agreement contains a lease in terms of IFRS 16 leases. Commission of 3% based on the normal selling price of a Bruno 7 was paid to BC agents for setting up the lease agreement with ZGR Limited. Right. The normal selling price of one Bruno is 180,000. The cost to manufacture one Bruno is 120,000. Extreme Limited had to pay commission on all the 5 vehicles and also incurred a total of 17,600 legal fees to secure the lease agreement with ZGR Limited. The gross profit for the year ended 30 June before the above lease agreements was taken into account was 1,380,000. The markup on all vehicles is 50% on cost. The company has no other income apart from those indicated above. Right. I want us to do the calculations, and then possibly you can be able to try to do the note on your own, exactly the same way. After I've done the amortization table and stuff like that, I think it will be easy for you to do that. Right. Let me just show you the calculations. Then your homework will be to do the notes. Then I will see, maybe before I move on to PPE, whether I should maybe look at that one. Right. I think I might need to look at one more. I think the last one, maybe next week on leases, before I move on to PPE. Right. First of all, this is a manufacturing dealer list. So right, revenue should be recognized at the lower of selling price and the present value of the lease payments. So we should find the lower of the two. It will be the one that will be used as the revenue, and it will be the one that will be used when we do our amortization table. Right. So now let's have our sales is equal to, we are told that these vehicles, the normal selling price is 180. And there are how many vehicles? 5 vehicles. So it's say 180 times 5. Which is equal to what? 900,000. Then we find the present value of lease installments. Right. Our PMT they will be paying 33,493 per vehicle. So we should multiply this by 5. So 33,493 times 5. What do we get? Thank you. 167,465. N is equal to 5. Our I is equal to, we use the market related interest rate, which is the 8.5%. We use the market related interest rate, 8.5%. LV is equal to 0. I think we were told that there is no guaranteed or unguaranteed residual value. We're told that there will be no additional cost here. What is our PV? Those who had changed your calculators to beginning of year mode, this time around it's not beginning of year. We're paying at the end. 716,013. 716,013. Right. So revenue.
No, Eugene, that answer is not correct. I still had begin. So I'll remove it. Sorry, Eugene.
Okay, so can those guys, can you just correct it? One 167,465.
No.
No, that one was the PMT. 659,920. Right. Therefore, revenue will be recognized at 659,920. So that is the value at which we are going to recognize our revenue there. Right. So we then do our amortization table. And please, when we are dealing with the manufacturing dealer lessor, we don't add the additional costs incurred by the lessor. This commission that they incurred, I think we're told about the commission and stuff like that. They will not be added on the list. The commission and the 17,600 legal fees. When you are dealing with the manufacturing dealer, so these amounts will be treated as expense in the profit or loss statement. They will not be part of the lease, finance lease asset. So any additional costs paid by the lessee in a manufacturing dealer, so we don't add them to the fair value of the lease. Right. So that would be we'll do our amortization table. We'll have our debts. Okay, starting 1 July 2017, if I'm not mistaken. Let me just make sure. Yeah, 1 July 2017. Then they are paying every 30 July 2018, every 30 July. So we have 30 June 30 June, 30 June 2019, 30 June 2020, 30 June 2021, then there's 30 June 2022. Right. We have our installments, interest, capital, balance. It will start as 659,920, the PV that you got up there. Then our installments, that's 167. Right. Right. I'm just using Excel to try to do this one. Right, that's our amortization table. Right. Any questions there? Right. So can you please as homework, can you do your profit before tax and your leases not? Then maybe next week before I think next week, let me just finish off on leases. There's also another part that I wanted to do with you. Then maybe during the weekend next week we'll then do the PPE. So please, your homework is to try and do these notes using the information that I've given you. Try to do the notes using the information that I've given you. Okay, thank you so much. Have a blessed night.
Thank you. Bye.